this is actually a very, very serious point we've arrived at. But getting back to the situation as far as Russia and China are concerned, they now need to protect their currencies from an impending collapse of the fiat currency system, of the dollar base. And I think that's where we are. And I think that this is why BRICS meeting in Kazan is actually so important. If Russia and China don't act soon, and this seems to me to be a pretty good opportunity, if you like, have a facility, if you like, for trade settlement and the purchase of commodities, being priced effectively in gold through rubles and through yuan.
The BRICS bloc is advancing efforts to reshape the global financial order, led by Russia's call to create an alternative to the International Monetary Fund, IMF. The proposal aims to reduce dependence on Western financial institutions and develop new frameworks that better align with the interests of BRICS members. A key part of this initiative is the potential introduction of a BRICS trade settlement currency backed by gold, marking a shift away from traditional fiat currencies. Unlike fiat money, which relies on trust and government policies, a gold-backed currency would provide intrinsic value and greater stability, offering an alternative to the increasingly volatile US dollar. Financial expert Alasdair Macleod highlights that Russia and China intentionally minimize their exposure to US financial systems while increasing their gold reserves. This approach mirrors a global trend among central banks, which are moving away from the dollar and euro in favor of gold, signaling growing concern over the risks associated with fiat currencies. With the US grappling with rising debt and reduced foreign demand for its Treasury bonds, these developments suggest waning confidence in the dollar's long-term reliability. Russia's finance minister Anton Siluanov recently highlighted the need for BRICS nations, representing 37% of the global economy, to establish new financial institutions that better serve their interests, given that Western-led organizations like the IMF and World Bank no longer meet their needs. The urgency for this shift is underscored by Western sanctions that have frozen Russia's dollar and euro reserves, highlighting the vulnerabilities of relying on US financial systems. In response, President Vladimir Putin has emphasized the importance of creating a new international framework in collaboration with BRICS partners to promote a multipolar world order. At the upcoming summit in Kazan, scheduled for October 22nd to 24th, leaders will discuss enhancing cooperation through BRICS Plus and exploring the introduction of a gold-backed currency. This move aims to reduce the dominance of the US dollar and strengthen economic stability among BRICS nations, positioning them to navigate geopolitical risks better and foster greater financial independence. Now, let's watch the clips from the interview. Before we proceed, please take a moment to like this video, subscribe to the channel, and hit the notification bell so you don't miss any future updates.
And I think the other beauty about this is that the idea of, sort of a basket of currencies backed by gold, which is complete nonsense, gets thrown out of the window. Instead, the sensible strategy is to say, well, look, here is this new trade settlement currency. It's backed by gold. You can convert it into gold if you want, etc., etc. Use it if you wish. It's up to consenting parties. That's the way forward. And I think that's probably what China and Russia understand. But the other thing that comes out of this, I think, is very important. And that is that while Russia clearly sees the benefits of putting the ruble onto a gold standard, not least to show the contrast, if you like, between the ruble and a fiat dollar. But it would appear that China is moving in that direction as well. Now, why would this be? I think, firstly, because America is getting very belligerent, not just in the Middle East, and also, of course, in the Pacific. So this is something which the Chinese do recognize is becoming a problem. It's becoming a threat, if you like, to both Russia and China and their mutual plans. It's a threat which they can either ignore or alternatively, quite frankly, I think America is taking on too much. I mean, I don't think they'd win against Russia. I don't think that they would ever manage to break up Russia, which, has been the stated objective for some considerable time. So I think America is on a losing wicket, not only in the Ukraine, but I think also in the Middle East. And the unfortunate thing, of course, that Israel gets sacrificed sacrificed. Israel is bust, and is having to fight for its very survival. It needs America there to help it. I don't think the America's going to win against this one. And if I'm right in that, then you could say that as far as the alliance between Russia and China is concerned, they don't need to do anything. That's been Chinese policy. Just stand back, let America make all the mistakes. And it's been a winning policy. So why not continue? But this is something which has probably run its course because of the debt situation in America. The fact that the two largest foreign buyers of US Treasury debt are now net sellers, as Japan and China, for different reasons. The fact that America is now in a debt trap. This is a point which is recognized by multiple central banks who've been selling dollars. They've been adjusting their currency reserves, if you like, dumping dollars, even dumping euros in return for gold. What does that tell you? They're going into gold, they're getting out of fiat. These are alarm bells, which we ignore. We sort of just think, well, gold's going up. Okay, central banks are buying it. We don't know why they're buying it, but they seem to be buying it. The idea that they want to hold on to pet rocks, well, doesn't make any sense. But it does make huge sense if you understand the difference between fiat money, which is credit unattached to any value whatsoever, depending entirely on the faith in it, initially by foreigners and then eventually by the domestic users of that currency, compared with real legal money, which is internationally accepted, which is gold. So this is actually a very, very serious point we've arrived at. But getting back to the situation as far as Russia and China are concerned, they now need to protect their currencies from an impending collapse of the fiat currency system, of the dollar-based fiat currency system.
During an interview, Alasdair Macleod cautioned against the looming threat of a fiat currency collapse, emphasizing the critical issue of declining purchasing power. He pointed out a notable trend where countries like China and Japan have shifted from net buyers to net sellers of U.S. treasuries. This change is part of a broader movement among central banks worldwide, increasingly favoring tangible assets, particularly gold, over fiat currencies. This preference reflects a growing skepticism about the long-term reliability of currencies that depend on trust and government backing as nations seek real value in an unstable economic environment. Additionally, the Federal Reserve's recent decision to cut interest rates more than expected highlights the delicate balance of U.S. monetary policy. With the national debt exceeding $35.6 trillion and the debt ceiling set to be reset shortly after the presidential election, concerns about the government's ability to finance its deficits are escalating. A weaker dollar, exacerbated by rising inflation and interest rates, will inevitably lead to increased borrowing costs for banks and businesses. This situation raises the specter of financial instability, as deteriorating purchasing power may push these institutions to the brink of failure, prompting urgent discussions about the future of U.S. monetary policy and the viability of fiat currencies.
The dangers of a fiat currency collapse are that really what we're talking about is a loss of purchasing power for the fiat currencies. Now, that means that the purchasing power of your dollar goes down. The way in which this usually works, or has worked in the past, and I see no reason why it shouldn't be different now, is that the run on the currency starts with foreign owners bailing out. And so we are already seeing, as I said earlier, we're already seeing China and Japan turning net sellers of US Treasuries and net sellers of the dollar. And that is something that is likely to increase. The fact, as I said, that central banks around the world are selling fiat currencies, particularly the dollar, which is, the king rat of fiat currencies, in return for real money, which is gold, also confirms this trend that the foreigners basically are getting rid of dollars and going into real money. There will come a point where there is a wider awakening of the problems which are leading to a collapse in the purchasing power of the dollar. We saw a start of this with the Fed cutting interest rates by 50 basis points, in September, when 25 basis points was expected. Now, what's called point difference between friends? It's not that material, but in terms of indicating the way the Fed policy is going, it was a very, very strong suggestion that the dilemma that the Fed faces in terms of high interest rates killing the economy or a weaker dollar, they've chosen the weaker dollar route. So again, the foreigners know that this fiat currency's purchasing power is going down. Then we have the problem of how does the US government fund its deficit? That's already run up to 35.6 trillion or something. You have got the debt limit being reset on the 2nd and 3rd of January, which is after the presidential election and just before the new president takes office, I think, because they take office on the 6th of January or thereabouts. So, if I was Kamala Harris or if I was Donald Trump, I would want to get that ceiling raised as much as possible to give me room to spend, or room, if you like, to sort the economy, or however you like to put it. So how about 40 trillion? And, we could get there quite quickly. So all this is feeding into a crisis for the dollar. Now, when the dollar's purchasing power goes down, interest rates rise, which means that banks and businesses start going bust. The cost of funding, of US Treasury funding, rises materially. And guess what? They're then definitely in a debt trap. So how do they manage this? Well, they've got to rescue the whole caboodle, which basically means they've got to devalue the currency by printing currency to replace contracting back credit. I'm not quite sure how this is really going to play out, but you can see that this is a situation for which there is no easy solution. And there will come a time when the average American begins to realize that it's not prices going up, but it's the purchasing power of the dollar going down. Now, the great Austrian economist Ludwig von Mises opined that when the users of a currency finally realize that it's the currency going down, then it's had it. That's the end of it. And so the only question remaining is how quickly could this happen?
The potential rise of a gold-backed currency could transform the global economic landscape as countries increasingly seek alternatives to fiat currencies amid concerns over inflation and declining purchasing power. As nations like those in the BRICS alliance explore this option, we could see a significant shift toward using gold-backed currencies for international trade, enhancing financial stability and reducing reliance on the US dollar. Share your thoughts on Alasdair's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.